Hello and welcome to another Fintech Surge Advanced Team Conversation. Today we are joined by Pedro Pinto Coelo, who is the chairman of the AFIP, the Fintech and Insurtech Portugal, an association representing the fintech community in Portugal. He has more than 25 years international financial services experience with leading blue chip institutions across 3 continents. His forte is enabling challenger banks to establish strategic partnerships with fintechs to create profitable financial products using open architecture models. Open banking trends is something we will be talking about today, and what the Gulf region can learn from Europe when it comes to establishing partnerships between banks and fintechs. I'm pleased to hand over to you now to John Lillywhite, who is the Google Research Associate of Mohammed bin Rashid School of Government here in Dubai. Over to you, John.
Thanks, Oscar. Pedro, thanks so much for joining us today.
It's my pleasure. Thank you.
So you have very wide experience across the European banking sector. But as Oscar mentioned, you are also the chairman of the Portuguese Fintech and Insurtech Association. So this is a great opportunity for us to find out how banking is changing in Europe, also what's happening globally and what the future might hold. But I thought to begin with, we could ask a very simple question, which is, what is a challenger bank? That phrase that comes up in your CV and some of the projects that you've worked on.
Very well. I'll start with that. You know, I would say a challenger bank is in a financial institution that likes to challenge the status quo. So, as you know, in most developed markets, the economy or the countries are already overbanked. So there is large players, typical universal banks that have been around for quite a bit. There is some resistance from clients to move from one bank to another, although regulators are trying to make things easier for clients. But I would say challenger banks basically are trying to focus on niche markets where they can really attack the incumbents and try to find ways of growing their business and ultimately reach a point where they have enough scale to actually be a player, a relevant player in the market. Obviously, this is easier said than done. As you know, a number of challenger banks and what they call neobanks, with the last digitalization trends, have been coming into the market, particularly due to the fact that clients now are much more familiar with the use of mobile apps and doing mobile banking, where before there was a wave maybe 20 years ago where people were migrating to internet banking. Now we're seeing the migration more to mobile apps or mobile adjusted websites. So in fact, challenger banks now are trying to use this type of tools, and the fact that we have the ability to have devices, intelligent devices, to do a lot of the business through these means, basically.
So thanks for that introduction, and it makes sense. And I think there's a couple of points there. I think we could begin with the fact that, you know, you've worked in banking in Geneva and Switzerland. You've worked with Angola. You know, I mean, I've got your CV here. You've worked with Citigroup in London, of course, in Portugal. So you understand kind of how banking is working. You've been in the industry, you know, 25 to 28 years, and you use this phrase that, you know, challenger banks are here to kind of disrupt the status quo. And you know, that is a very interesting phrase, because for much of, you know, our lifetimes, banks have been the status quo. So where is this incentive coming from? From your experience, you know, working in the banking industry all these years, what do you think are the forces that are really kind of pushing for this change?
I would say ultimately it's the client who is also driving this push. It's not only the fact that there are tools out there that make life easier for the client. I think we can see that clients now have been used to the ease of use of other apps and other companies like Amazon or Uber, which are the most the ones that are more that people are more familiar with, and they would like, and clients want to have the ease of use that they are used to in these cases. So there's been some sort of revolution initially of digital banks trying to support these clients and make it easier for the client on how to interact with the banks, because banks used to have very complex internet banking, home bankings with all types of options, where maybe you only use 20% of those options and the other 80 you don't. So it's becoming much more user-friendly. And I would say that this is not all. You also see that the universal banking model is being threatened by brokers, by intermediaries, by financial institutions, even non-financial institutions, trying to eat part of the value chain that the banks typically used to control. So from this development of alternative lending, for instance, where you have potential lenders which go to clients, to borrowers, and find a good way of interacting with these clients and find a solution for them where banks were not able to or didn't want to. So there is all sorts of different dynamics that have created this environment, from challenger banks all the way to other types of fintechs or big techs that allow the client now to choose from, where the incumbent banks now, they see they are no longer in a very comfortable position, and they see competition at different levels.
Yeah, I mean, you know, what you said about the kind of universal model for banking changing it is in many ways sort of historic. And you mentioned, you know, a couple of factors that are pushing those changes, but you also mentioned a company like Uber, which of course isn't a bank. People are used to paying for a ride pretty seamlessly over their mobile phone. You've also got, you know, companies like Facebook, again, not a bank, nothing close to a bank, discussing a digital currency called Libra. And, you know, this is a platform that in many ways, it's not a nation state, but it has a market or you know, a population of users for that service of 2.6 billion potentially people. And that's far larger than any single bank. So there's these holistic series of challenges, I'm sure, to, you know, more traditional banking products, but also from the quickly rising companies in a new economy, platform companies like Facebook, like Uber, like Apple, that are delivering services to not just millions of people anymore, but billions. So how do you see Europe in particular, the European banking sector, across companies, but perhaps starting in Portugal and then in some other jurisdictions that you think are interesting, trying to respond to these challenges and these trends?
I would say they are in a quite difficult position. On one hand, they have similar legacy issues to the US, for instance. So they share the same issues. They are still they are still managed on the rails of MasterCard or Visa, for instance, like the US. But on the other hand, they pretend to be a full region, homogeneous, which the US is, but Europe is not. Okay. And so you cannot compare Europe to the US for that reason, because each time there is a new bank or a new institution being created, where it's in Lithuania, Estonia, Germany, France, Portugal, or Spain, and they move and they passport their license across Europe, then they are confronted with differences that are imposed by local regulators. Although we have a European Central Bank and EBA, European Banking Association, And although they provide recommendations to the local regulators, then the local regulators like to put some icing on the cake to make it, so that makes it more and more difficult. If you had a full homogeneous market, it would be much easier. Then on top of that, we have cultural differences and languages differences, but we are used to that, we are Europe. But if on top of that, we also have regulatory arbitrage, that's even more complex. So I would say we are at a disadvantage compared to a market like the US. On the other hand, we are at a disadvantage compared to Asia, markets like China or even India, which have a huge population, which have been for a long time unbanked or underbanked. And you have technologies now bypassing completely the banking sector. So you have seen the uprise of Alipay, WeChat Pay, that suddenly from night to day, you no longer need cash to transact. You know, a few years ago, I used to go to China, you needed yuans, you needed cash to do transaction. Now it's the other way around. If you don't have your app and you are not a local with an app, you have to find ways to transact, because effectively they just use the apps, the QR codes to transact either peer-to-peer or peer-to-business or business-to-peer. So it's a full revolution. And what has benefited these large economies, and we will benefit even further, is data. As we all now say, data is the new oil. And you see that banks with their legacy systems, they have a lot of data, but that data has not been cleaned up. And you have those data, I would say, operators trying to clean up the information and trying to make sense of all our transactions on our income, on our bank statements. But effectively, it's not that easy. I know from experience to actually tag all the details to guarantee who you are, what type of expense or revenue behavior you have, when compared to apps like, again, WeChat Pay, Grab in Southeast Asia, or Alipay, because there we have complete clean data set, and we know your behavior, how much money you have, how much do you spend, what are your activities. So the data is so rich, then I could easily propose you a credit, and I would know exactly what would be the time period that would be reasonable for you based on that information. That, again, has been used from telecom companies in Africa, for instance, again, bypassing the banking system with M-Pesa, which was really the first experiment on a payment platform that was not the bank. So we are looking here at a revolution. So coming back to your question, Europe is not necessarily the best place. And that's why some startups, fintechs in particular, sometimes they have a great idea, and the first thing VCs tell them to do, okay, you are in the UK, you are growing in the UK, why don't you just go to the US, because it's a larger market and you'll grow much faster than actually going to France, Italy, Germany, and try to fiddle with the different regulations. And you have some inertia to really to grow very fast.
Well, thanks for that summary. I mean, there's several points there, but I suppose that the best way to respond to that is, so how do you think Europe can possibly compete? I mean, what are ideas such as open banking, and how are European regulators looking at what's happening on platforms like Facebook and Google, or how China has already gone to a cashless society? How can Europe hope to compete? And what are some of the ideas that are coming out of Europe to kind of get past some of these geopolitical and social and cultural obstacles?
I would say, number one, let's create an homogeneous regulation. So I would say give much more power. I know I'm not a political person, but and I'm not in favor of necessarily centralizing the power. But here in this particular case, I think all the countries should come to a consensus on regulation and not have different types of regulations from country to country. I'll give you an example, a very simple one, which you're probably familiar with. Account opening. You know that each country has its own rules on account opening. In some countries, I can do remote account opening. In some others, I can't. In some countries, you require a recorded video to guarantee that I know who you are. Some others, they don't require that. They have other means of doing it. But I would say, if you already have an account in a European country, I know who you are because I can rely on the data that you provide to that particular bank that is already been regulated by the European Central Bank and by the local regulator. So I would have the ability to say, if you're not coming from abroad, which I don't know where your background, ultimately it would be very easy to open a second account because you're already part of the financial system. I know where you are a tax resident. I know who you are as a person. And as you know, there are very good technical tools now when you go through the border to identify who you are, by moving around. You don't even have to have a video conference with someone in the border to say you are who you are. So we would use the same technology. I'm just giving that as an example. So, I mean, there's a lot to be done from account opening, from approval, from a credit approval process, from limiting the interest rates in certain countries where in other countries there's no necessarily a very low limit on interest rate. There's a bunch of things where we could all agree to have homogeneous regulation. Point number two, because of the age of our population in Europe, because we are typically older on average than the US or Asia, I would say I would invest a lot on financial literacy and try to help older people to understand how to use the tools and to make sure they believe it's, digital transactions are just as good or even better than cash transactions. An example is in Germany, for instance, people are very reluctant to pay with electronically for some reason. Historical reasons has made them, withdraw money from the ATM and go pay in cash, which just makes sense nowadays. So again, it's an educational process. Other examples is, for instance, open banking has been created, but people need to learn more. What is open banking? What is it there for them? I think open banking is very well recognized and known among the financial sector community, but the normal citizen doesn't really know what impact and what can it bring to them. So I think it's a matter of education. Another example, instant payments. It's a great initiative. So I can go to a store, I'm a Portuguese, I can go to a store in Germany and pay instantly, and I would pay basically nothing. But instead, I go and use my Visa card or MasterCard, and the merchant there will be charged dearly for that transaction. So we should motivate and incentivize stores, retailers, and clients to start using this to reduce the costs of transacting. And use electronic payments more often. The other point that we are seeing is that technology has advanced very fast, but our legal framework, the legal systems have not advanced this far. So we talk a lot about blockchain, but if you want to do something using smart contracts, which, as you know, it's a part of the technology using blockchain, a number of countries don't recognize smart contracts as a legally bound contract. So we have to rewrite the rules and say, okay, now an automatic smart contract is something binding. So that's just the first one of the hurdles to overcome when you start using technology. You have to have a legal framework that actually accepts this type of technologies. Number two, I think because the world is becoming more global, again, we need to be more united. So I am fully in agreement that we want the same sort of confidence that we have on banks. We want to have this on future platforms. So there will have to be much more cooperation between countries and between regions to actually be able to interact under a regulated framework where clients like you and me are comfortable about sending money here or there using a particular platform, but are recognized in the, from the sender country to the country that receives the money. Again, about digital currencies, I would say that, there's been a lot of speculation about the use of cryptocurrencies. But I would say that effectively countries and European, economic blocs will start using digital currencies themselves for financial and economic reasons. And there are still doubts out there, and some people who consider that other cryptocurrencies that are not linked to fiat currencies probably will be a hard sell to governments, because then governments will lose the power of issuing their own currency and managing a particular country and taxing A or B. So I would say there's still a lot of debate going on, and I'm a believer that ultimately the solution will be that countries will start issuing digital renminbi, digital euro, digital US dollar, and we'll start getting used to it. And if we want to be even more ambitious, the project like Facebook that you mentioned, Libra, which is a multi-currency asset that has already been invented by IMF, was not just put into practice, but eventually that would have the benefit of less volatility in terms of currency, and it could become a reference currency or an alternative to the US dollar as a reserve currency to some small countries that probably don't have enough critical mass to have their own currency anyway. So, and they have issues about the attractiveness of their own currency because of constant devaluations due to the economic issues. So we're getting a bit into the economic side. But I would say this brings to the point that more and more cooperation and more sharing experiences, and eventually regulators allowing Sandbox to exist, to test and nurture some ideas, and then from there bring to life, because no one knows exactly, how much the clients are going to use this, number one, and number two, how successful is it going to be, and what are the issues behind after we actually try it. So I think that would be a good way, and I think some countries are really at the forefront on allowing startups and partnerships with startups and current players to play around with new ideas to really create a more frictionless financial services world, effectively.
Yeah, I mean, the idea of a European-wide sandbox for entrepreneurs all over Europe seems like, a fairly, relatively easy kind of case study or technical project that could be built and have some utilities solving or experimenting with some of these jurisdictional issues. But just kind of really going out there a little bit and pushing the logic of some of what you're saying about harmonization and working together and digital currencies, and kind of three pensive but sort of related questions. One, do you think this is the end of central banks? Two, do you think this is the end of national currencies? And three, projecting this forward, if we have a system where we have central banks or central the currencies start falling, are we really looking more at government as a platform and nation states as slightly less important if we have these financial systems that are not as centralized and they're not as dependent on national currencies? So there's three questions there, the central bank, the role of currency, and the role of the nation state.
Wow, that's the million-dollar question.
But it is the million-dollar question. But it seems to reside behind so much of the policymaking and the regulation. Casting it forward, if you really did have a European-wide digital currency, a digital euro, how is that feasible, and what impact would that have over the years? Do you think a digital euro that be used across different countries in Europe is something that will happen in the next few years?
I believe so. I think the digital euro, the same way China and the US are now looking into it, I think it's a very important tool for different reasons. Number one, to have a much easier trading environment. So nowadays, if I want to export to China, I pay in euro, I convert it to dollar, and then the Chinese company converts it back into renminbi or just keeps the dollars, because the dollar is the reserve currency of the world. The moment you have digital euros or they have digital yuans, you can have an account in euros and just keep it in euros and have a trading account in euros. And I think there's a lot of countries and blocks that are looking at alternatives to the US dollar, because they consider it's just overbearing how much power they have in their hands by being a global reserve currency. Okay, so I would say the digital currency is a way to get away with. So ultimately, other blocks apart from the US are going to be fighting to have this digital currency for trading activities, and it's going to be a very important aspect for them. Point number one. Point number two, the digital currency will make it also much easier to have targeted fiscal policies. So if I want to help a particular group of or segment of the population, I don't have any more, friction or any more noise until I provide the money to particular segments, or whether it's to students, to families in need. So there will be ways of creating solutions to help the economy. And obviously, the moment you have this digital currency, you have much more power also from a tax perspective. So you know exactly where you've spent, where the money is coming from. And that's something that maybe the population in general is not that comfortable on having, the big brother looking over your shoulder and knowing exactly all the transactions you've done. So obviously this makes it easier for any state to control their citizens in terms of tax evasion. That's a big elephant in the room that no one wants to probably discuss, but that would also be something that obviously we would have to consider. So because of those reasons, I think we will see that. Whether we will need a nation or not, or whether nations will become more or less important, it really depends on the freedom of people like you and me of choosing, where should I live, what currency can I use there, and how easily it is to basically move my assets from one place to the other. And there are a lot of people who are basically capitalizing on Bitcoin and using that as an argument to say that it's a very easy storage of value, much easier than gold. So you're able to move much faster Bitcoin from one place to the other than gold, for instance. So there is some school of thought that future stores of wealth could be in certain cryptocurrencies or assets that can eventually be tokenized or digitalized in a way that what you have in the real world is actually also represented in the virtual world. So you are owner of a particular group of assets anywhere in the world, but you have the digital representation. So you can actually trade them in a much easier fashion than if you would have to do it in the physical world. So I think a lot of things will change with all these dynamics, but I don't think anyone really knows yet what would be the final setup of this governance, because it brings a lot of challenges that people are not used to, and the value chain that we were used to in the past, it may be completely inverted, but I think it's also for the good of the economy of the population. It's just that this transition period might be a bit messy because people still don't understand the different dynamics.
Yeah, so it's not just a revolution in banking, really. It's wider. It is in governance. So I guess just to close today, Pedro, how do you think Europe can learn from and collaborate with some of what's going on in the UAE or the GCC? Is there anything happening here in particular that you think is really interesting?
Well, I believe the UAE has been particularly bold in taking challenges, in taking risks, and in trying to really focus on innovation. I think, if I'm not mistaken, It's one of the few countries, if not the only one, who actually has a ministry just focused on AI. That's one example.
Correct. Yeah.
I mean, and thinking about alternative energies, everything that is regarding innovation, I believe they are really bold. And since it's a country that basically has been almost reinvented, from the last 50, 60 years, I think that's a very good lesson for the European Union to take. I think the European Union, as you know, used to be, the power, the center of the power in the world. It used to be Portugal, Spain, then Holland, then France, the UK, Germany. Each country had its own golden age. But I think we need to reinvent ourselves to guarantee that we come back to these golden ages by being more bold and having embrace more innovation, a bit like UAE and some of the Middle Eastern countries are doing, because they see that they have nothing to lose. And if they don't move forward, their wealth that currently sits on oil, it's not there 100 years from now. So they have this urgency need. And I think Europe also has other urgencies, like the demographic issue that we have, because our population is shrinking. So we really have to be bold to guarantee that Europe is not out of the picture in 100 years' time. Obviously, it's not, but probably will be in a much smaller role than 100 years from now, with big powers, springing in other parts of the world. I believe that's the lesson we could take with the UAE.
No, thanks. I really like that analysis. As someone who's lived in Europe and in the UAE, I think it's very accurate. Things do move fast here. You feel like you have elements of the whole world coming here to work on some of these problems. And it's great seeing it. And then, as a European myself, there are times I go back and I am a little bit frustrated. But I do remember arriving in Porto, actually, and arriving at the airport in Porto and ordering an Uber and getting straight to I've got some cousins who live there, to their house, and it was seamless. And I remember talking to the driver and saying, I haven't been back in 5 years. How are things here? And I was being told, things are changing here too. Europe is moving forwards. It might feel like it's slow, but there's a lot of moving parts. And last time I was there, it did seem like that there were new incubators and startup cafes and people who were experimenting with digital currencies and were aware of what was happening in Silicon Valley. So I think there are signs of change in Europe too. Is that correct?
No, I totally agree. I think there's more and more interest in this. And I think governments really have to make it easier. I think there's been a huge development. For instance, Portugal hosting the Web Summit has put Portugal on the map.
Now, that used to be Irish. I mean, I'm half Irish, so that used to be Irish, and then they moved to Portugal.
Yeah, the founder is Irish, as you know. Yeah. And now even with the pandemic, creating nomad villages for the IT nomads. So I think there's a lot of interest also in Europe, and in particular in Portugal, in some areas, some regions, some local municipalities and regions trying to attract these digital nomads to spend 1 month, 2 months, 3 months, and enjoy, a more open air type lifestyle than being closed in a cubicle somewhere in the north of Europe, trying to code, which is probably not as pleasant if you are somewhere else.
Definitely. I think Portugal, the UAE has just passed a similar law, a remote working law. But I definitely agree. I think Portugal, cities like Lisbon are missing a very easy trick there. I think if Europeans knew, they could work remotely out of Lisbon or Porto or wherever for a relatively cheap rent with, good kind of logistics around them, it would make total sense. So, you do sometimes think Europe does have all this dormant potential. It's just about kind of activating it.
But the key, let me tell you, the key is in one element that you mentioned indirectly. It's in youth. We need young people.
I think so.
More and more. young in their mind as well, right? Not necessarily biological age only. I think young people are willing to take more risks, and I think the more population you have that are students or related to the university, the ID, research and development, and that other areas, I think this just creates more dynamic, and the countries and the regions will start thriving, because typically as you reach a certain age, then you become much more risk averse, right? Because you just want to manage the status quo. And that's why I think Europe should attract more and more young people and benefit the environment to bring these new ideas and create testing beds for all the entrepreneurs that have great ideas to test effectively.
Yeah, I think that makes total sense. Well, Pedro, thank you so much for your time today, for that wide-ranging discussion. I think we've covered finance.
It was a pleasure.
Economics, and you.
Exactly.
Very much enjoyed talking with you.
All right, great. Thank you. Thank you for hosting.